Good afternoon, and thank you for sticking around for the session. When Kenneth asked me to do this, I panicked. I said, how on earth am I going to manage to go through the fourth directive in what I thought would be an hour? When I saw the program, it went down to 40 minutes. Now, the clock is saying 25. So this is really going to be a whistle-stop tour across the fourth directive. But what we'd like to concentrate on is what this is really going to mean for business. And I have an excellent lineup of speakers and engaging panelists, and I'd like to introduce them because they're going to have to help me do this in 25 minutes. So at the far end is Dr. Manfred Galdes, who's a director at FIAU Group. But Manfred today is sitting here as a committee member of the Prevention of Money Laundering and Financing of Terrorism Committee of the Malta Institute of Accountants. Then we have Alfred Zammit, who is Deputy Director at the FIAU. And finally, there's Ariane Azzopardi, who's a Senior Manager responsible for compliance and AML at Domus. So, the fourth directive. Fourth directive was adopted within the EU in 2015 with what is normal, a 2-year transposition agenda, which means that this directive will have to be transposed into the national laws of member states by the 26th of June 2017. But in the meantime, something totally unprecedented happened in the sense that last July, in fact, to be 100% correct, we actually got another directive coming through, amending a directive that hadn't yet been transposed. And that is the 5th Anti-Money Laundering Directive, which is going through all the European motions at the moment. And we still have to see where that is going to land. So that leaves us in a position where, technically speaking, by the end of June of this year, we all have to be looking at transposing a directive, the fourth directive, provided it comes into our national law by then, and obviously we'll be having a discussion about this, knowing full well that down the tracks we're going to have to go back and change again in order to accommodate what is coming through by way of the 5th Anti-Money Laundering Directive. Now, as I said, in this very short time frame, we can do little justice to the fourth, but just to give you an idea of what this is all about. So first of all, we have a very a huge emphasis and a refocus on the risk-based approach, which we are seeing permeating into a lot of other different areas, including, for example, the treatment of politically exposed persons, where now we don't only have to have procedures in place for our non-domestic PEPs, but also for our domestic PEPs. Another change, again, and very much connected to the risk-based approach, is that each member state has to have its own national risk assessment in order to assess the threats and vulnerabilities of the jurisdiction to money laundering and financing of terrorism. And one of the biggest changes that I think we're going to be seeing coming through is the beneficial ownership register, which essentially is going to make our lives much easier, but I think we've got a long way to go before we can see that actually happening. Now, before I start off my set of questions, I'd like to take you through a couple of slides, which essentially are the product of a survey that KPMG carried out over these last couple of months about the state of the transposition of the fourth directive. So, this survey was carried out across 14 member states. So that's not all the member states, but clearly the more significant ones have been included. And the question that was asked was whether the 40EU AML Directive had already been transposed into the national law of the country. And this is as recent as about 6 weeks ago. And by that time, only 7% of member states had transposed the directive, with the rest saying that this still had to happen. And then another question was whether a grace period had been communicated by the authorities, given that, you know, most of the countries are late with the transposition. One would expect that there's a grace period with it. And 14% have had official communication from their authorities that there will be a grace period. 86% no. However, the expectation is that as we get closer to D-Day, the number of countries giving a grace period is definitely going to increase. And when asked the length of that grace period, most people seem to hover around the 6 to 9 months grace period. So, you know, I think these two slides are a natural segue into what I would like to be my first question, which will be directed to Alfred. So, Alfred, obviously from your position at the FIAU, you have insight into what's happening even within Europe. What can you tell us about the state of the 5th Anti-Money Laundering Directive? And also, we'd like to hear a bit about the you know, bringing the discussion local. What are we to expect as practitioners with regards to the transposition of the 4th?
Thanks for your question. So I'll start off in chronological order, and I will start off with discussing the 4th directive. And then that will maybe take us on to the 5th. So obviously from the FIU side, the 4th directive is being mainly transposed by means of a bill proposed to amend the Prevention of Money Laundering Act, and also by amending well, actually not amending, but we intend to repeal the current regulations, the Prevention of Money Laundering and Funding of Terrorism regulations, which are regulations which subject persons in Malta, as in banks, financial institutions, and companies as providers, etc., have to abide by. So in actual fact, a lot of work has been done, but I will, you know, at the outset say that we fall within the 93% of the member states that have not yet transposed the 4th Money Laundering Directive. And what we are doing at the moment is we have proposed a bill to amend the Prevention of Money Laundering Act, which has been passed on to the Ministry for Finance, and this has been approved by the Ministry. And just as, in actual fact, as we were about to start the parliamentary process to get the bill moving, an election has been called up, so this is actually put on hold. And in that respect, there will be undoubtedly a slight delay. And with regards to the regulations, a draft set of regulations has also been completed. However, we are discussing these internally. The 4th Money Laundering Directive is far from a copy and paste exercise, which means that the directive has to be very carefully transposed into national legislation. And that in itself is an extremely complex exercise. And we have been reviewing very thoroughly the regulations internally prior to putting these regulations out for a public consultation process. So rather than just checking out something which is half-baked, we want to make sure that as best as possible we're going to produce a very good document for subject persons then to give us feedback on. So this is what is currently taking place with regards to the Act and the regulations themselves. So as you also mentioned, we are obviously now also working on the proposed amendments to the 4th Directive, which is also now being referred to as the 5th Directive, quite commonly. As we all know, the EU Commission published the proposed amendments to the 4th Directive in July 2016. These were targeted amendments. You know, when this took place, the intention was never to really have an overhaul to the 4th Directive, which was concluded quite recently. And the Council of Europe finalized this process of obtaining all member states' positions and compromise texts in December 2016. Following that, the Parliament put forth its proposals in March 2017. And as we all know, the proposed amendments by the Parliament were quite huge. There were quite a number of amendments, and this surprised many in the field. And what is happening now is, by way also of the Presidency of the EU Council, and members from the FIU are also participating in the Working Party meetings. A series of trialogue meetings are taking place, in the sense that meetings between the Council, the Commission and Parliament are taking place. For the period of our presidency, we scheduled 5 trialogue meetings. Trialogue meetings consist of political trialogue meetings and also technical. And 3 have already taken place so far, and another 2 have yet to take place. And obviously in these meetings a number of things are being discussed. Obviously one of the hot topics that is being discussed in these meetings is also the proposed amendments to the UBO registry and obviously whether full public access should be granted or not.
Okay, you mentioned changes to the law and changes to regulations. Obviously, that is going to have a spillover effect on changes to the implementing procedures as well, right?
Yes, yes. In fact, very recently, we published a revised set of implementing procedures. Although knowing that after the transposition of the FIAU directive takes place, we will have to go back to the drawing board and again look at the implementing procedures. But we are not expecting a huge change in the implementing procedures, so we thought that it would still make a lot of sense to go ahead with the revised implementing procedures, given that these now also allow for the use of certain technologies also to simplify customer due diligence processes. And once the transposition takes place, we will have to look at the implementing procedures and make some changes, primarily to reflect the fact that the transposition revolves around the new risk-based approach. So there will be a major change in that respect, but obviously this is to be expected. Okay.
Ariane, a question for you. With those of us who have been around and working in this space since the first directive, have always seen that with every directive we've seen the net of subject persons getting bigger and bigger and wider and wider. Is that true also of the fourth directive and the fifth as well? Can you give us an idea, quick idea on that?
As you rightly so point out, every directive brings in other service providers within the definition of subject persons, now referred to as the obliged entities. And as most of you probably are aware, now the PMLFT obligations will become applicable to the gambling sector, and it's not just the land-based casinos now, so it ropes in also the online gaming sector. Online gaming obviously brought with it opportunities for the operators and the players, but the evolution of this sector also resulted in a complex environment, and the online gaming sector was also then used to launder funds through stemming from illegal activities. So now the four directive ropes in also the online gaming sector, and therefore they need to have in place the processes, policies and procedures, the tools to be able to carry out the customer due diligence, the source of wealth, source of funds. So obviously it's not it comes with its challenges as well for this particular sector, which obviously is very unique in the way it operates. Apart from the online gaming sector, with the amended which is the fifth directive, we also note the addition of virtual currencies and wallet providers. So these now also become obliged entities in terms of the legislation, and this was as a result of the terrorist attacks, and it was a reaction to combat the financing of terrorism, and the scope is to reduce the anonymity of the transactions. So again, we'll see that virtual currencies now will have to look at the regulatory framework now they will be operating in, and carry out their ongoing monitoring, and also any suspicions which arise would have to be reported to the authorities. And there's also a discussion around having a database, central database with the identities and the wallet addresses which would be available to the FIAUs. Alongside self-declaration forms. So clearly we can see there's an evolution also in this industry now.
Great. So we're going to have new obliged entities coming on stream, but most of the people here in this room are already obliged entities today. And I think one of the burning questions is, how do you go about implementing a directive which is going to change in the future? What sort of challenges is that going to present? Manfred, perhaps I can start off with you. I know it's a tough one, so.
Okay, there are 5 weeks to go, essentially, to the deadline that the directive imposes. And as we heard, like many other member states, we don't have our regulations as yet. Nonetheless, it's very clear that certain important changes in the directive need to be implemented, whatever stance Malta takes and whatever angle the Maltese regulations are going to give to this directive. So in reality, and being aware as to what's really happening in practice, there are a number of subject persons that have already prepared themselves for the directive. In fact, I believe there are a number of subject persons that have been working on this for 2 years. You know, ever since we found out what the new requirements were. There are others that are still waiting, and I think these are the ones that are going to suffer most, because in reality, there's very little chance that the grace period is going to exceed, I don't know, a couple of months. So a lot will have to be done in a short time. And when I mean when I say a lot, I mean a lot. I mean, if we had to take maybe at the core of it, at the essence of it, what the biggest change is, it's now a dramatic shift to the risk-based approach. We already had reference to the risk-based approach in the second and in the third directive. In the third directive more than in the second, but now the fourth directive revolves around risk. Even if you see the word risk, how often it's used in the directive, it's used 149 times as opposed to 36 times in the third directive. So what does that mean? So ultimately, the risk-based approach has to be at the core of all AML processes. So without a risk assessment, one cannot carry out the due diligence that needs to be carried out. That means that due diligence, as we know it, is not going to exist any longer from June onwards. So just having a set of documentation collected on each and every customer is not going to be acceptable to the regulator any longer. What the regulator that was going to have adopt a risk-based approach from a supervisory aspect as well. So what the regulator is going to be expecting is that every subject person, from the smallest ones until up to the largest banks, have to carry out a risk assessment on their own customers, on the geographical area where the customers come from, on their own products, on their own services, on everything, carry out this exercise that draws out certain in-depth conclusions, and on the basis of those conclusions, the level of due diligence is going to have to vary. So this is an exercise that, first of all, takes time, obviously requires resources, requires a rethinking, requires changes in governance and how decisions are taken within an organization. It requires resources, as I said, both from a technical and from a human point of view. So I think those who haven't got cracking yet should, at this stage at least, carry out a gap analysis to understand where they really are at in terms of this directive, and a plan to remediate and bring their processes in line with what the fourth directive is going to be imposing.
You mentioned the concept of the risk assessment, right, that every subject person needs to do. Is it just a question of subject persons carrying out a risk assessment, and then when the regulator comes in, there's going to be a question of this is how we assessed it, or is this going to increase the need for the documentation of how you've arrived at that risk assessment? What's your view on it?
Okay, so the risk assessment is not a one-time exercise. It's something that needs to be carried out periodically, but at this stage, this is the first time the risk assessment has to be carried out, and one has to factor in what is the risk at a national level, one has to factor in what the risk is at a supranational level, and one has to examine in detail what risks arise within the organization. Now, one can't reach this conclusion without a scientific exercise that needs to back this up, because I can easily reach a conclusion that all my clients are high risk, so I'll apply enhanced due diligence to everybody, and so I collect 6 documents instead of 5, and the regulator will be satisfied. That doesn't work. In reality, what you have to do is prove to the regulator that there are low-risk clients and there are high-risk clients, and there's a big difference in the due diligence that I carry out according to the type of customer, according to the type of product, according to a number of factors. And these need to be presented to the regulator, and the regulator has to be satisfied that is the situation within the organization. Obviously, this is more difficult for the entity concerned because everybody likes certainty. Everybody likes to know that there are certain rules and these rules need to be applied, and I have 1, 2, 3, 4, 5, 6, I've adhered to them, present to them to the regulator, and the regulator is satisfied. Nonetheless, this is no longer a choice under the third directive. So 12 years ago, this was a choice. Today, 2017, we're living a new reality. We have to carry out this risk assessment, present it to the regulators, and that is the scenario we're facing. And as a jurisdiction, we are going to be assessed by Manival, as the Minister referred to the upcoming assessment, on the basis of these new rules. So in reality, our regulator is going to be assessed as to what extent the regulator has adopted the risk-based approach to supervision. Our operators, our banks, are going to be assessed on the basis of the extent to which they have adopted this risk-based approach. So it's a game changer for everybody, and I feel we are delaying things slightly, and this could create some problems when we are evaluated.
Ariane, same question to you. So Manfred has taken the angle that the risk-based approach for him is the fundamental change that's coming through with the fourth. Do you have anything else to add from your point of view?
To tie in with what Manfred is saying about the risk-based approach, because yes, I do believe it is the focus in the legislation. We should have carried out this gap analysis. We need to understand whether we have the right tools in place, whether we need to invest in new technology, and whether we have sufficient resources to be able to do so. And when carrying out these risk assessments with respect to the jurisdictions, because now the whitelist jurisdiction is no longer going to be available, so we have to carry out the risk assessment there. There is more onus on the subject person. But as you pointed out, we need to document the rationale. How did we get to this risk assessment, our risk analysis? And I think what is important as well is what are we doing differently when we have a low-risk client as opposed to a high-risk client? Because it's not just a matter of tagging, the clients and getting to that conclusion, but what are you doing differently? Because the idea of having a risk-based approach is essentially to focus more on our high-risk clients there. And I think this is what the regulator as well would be expecting of us. Also, we need to have the systems in place to be able to extrapolate information, which I have no doubt that in future the supervisory authorities will be requesting from us for them to be able to carry out their own risk assessments. So are we in a position today to be able to extrapolate that information and pass over in a timely manner to the regulator?
Interesting. So it seems like there's a change of mindset here, and no more ticking the box, but a very subjective approach to money laundering, prevention of money laundering going forward. I'd like to ask whether there are any questions from the floor at this point in time. So, do we have any questions? Yes, there's one question over there.
Ongoing on the risk-based approach, as far as I know, it's not just onboarding, but it is also ongoing. So the obligation is much greater than just onboarding the client and being happy. We need to know exactly what the client is doing all of the time, because it's an ongoing monitoring we need to do. I have a question for Alfred in terms of implementation procedures. The gaming industry is waiting for their version. This directive is coming almost end of May, and as yet we don't have implementation procedures. Is there a date when we should be receiving them?
Okay, thank you for that question. In fact, I had a number of points, and that was going to be actually one of the ones that I was going to mention, because there's a lot of work in progress, even with regards to the gaming industry, but not just the gaming industry, because as you may know, there are what we call sector-specific implementing procedures. which already exists, for example, for the banking sector and for land-based casinos. But we are currently working with the MGA in preparation for a guidance document for the gaming sector. And we are hoping to publish this consultation document in the coming weeks. I cannot give you an exact date, but we are trying our best to get this consultation document out because we can understand that this is very important for the gaming industry. So hopefully this will be out in the coming weeks, but an exact date I can't give, but it is also worth mentioning that there's a lot of material which can be referred to, but it is also true that the guidance document will be much better at guiding such a specific sector.
Any other questions? Yes, there's one at the back.
Yeah, sorry, is this? Hi, yeah. With regards to AML, I think you started the conversation with regards to the beneficial ownership register. We deal with a lot of families around the world, and what's your view on privacy for those families? Not for tax reasons, but for other reasons, for, you know, maybe they're living in countries where there's corrupt governments, etc. And why is the EU just opening up everything? And do people have a right to privacy or not?
Would you like to take it? So, Manfred?
Yes, obviously this is the biggest debate. So the biggest debate that came up with the 4 directive that we've been grappling with for the past 2 years is precisely this issue. In actual fact, there was a lot of resistance to the beneficial ownership register in terms of both trusts and companies, and in reality we saw several versions of the directive. As the directive was a draft, and then when the directive was actually came into force, and through the number of compromise texts, there were changes, and then there was this so-called 5th directive, so an amendment to the 4th directive, and there we had loads of compromise texts changing. So we started with access to the beneficial owner register being given solely to FIUs, solely to law enforcement agencies and entities that can prove that they have a legitimate interest. That's where we started from. Then we went to a compromise text in November, I believe, 2016, in which there was total full disclosure to the whole world, a public register of information. And then ultimately we went one full circle, and the last draft that we saw before these trilogue meetings, and we don't know exactly where things stand at the moment, but the last draft was that this is going to be, once again, just FIUs, entities carrying out CDD, law enforcement, and persons that can prove a legitimate interest. And everyone was very happy that they returned to the original text that they had objected to with certain vigor at the beginning. So it was one full circle. So ultimately, I think the question today is whether we're going to go beyond or not. I think this is the minimum, and if we're going to stay with this current text, I think we have already achieved quite a bit in terms of safeguarding privacy. Going beyond, I think, is going to create quite a few problems for the EU, because there's a competition aspect with third countries, and the third countries that compete with us are not just the offshore jurisdictions that we don't want to associate ourselves with, but also jurisdictions like the United States that are in competition with the EU and are going to have an edge over us. So this is a calculated risk that the EU has taken. It has put transparency as one of its top priorities, and I think this is the consequences that we are going to have to face. As being members of this club. Yeah, I try to avoid the eye contact.
We're being told that time is up. I think this, the few minutes that we had to discuss this probably raises more questions than provides answers, but that is the reality of the situation at the moment. Beneficial ownership definitely going to create a lot of issues, new subject persons, and I think, you know, just keep a watching brief on what is happening to know how it is going to affect you. So thank you to the 3 panelists, and I hope you found this session insightful. Thank you.